Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting the lab today. Can I please get a screen and audio check in YouTube and the Trader Lab? Thanks, Marty. All right, thanks, everybody. Well, welcome to the Traders Lab. I'm your host, Tom B. This stream's about integrating Bookmap order flow tools using the volume profile as a chassis in the intraday developing time frame. It's based on structured trades that integrate how the market works, why it does what it does, using order flow, as I like to refer to it, as the tip of the spear, to see inside microstructure to assist with trade execution. The idea of Trader Lab, it's a community of like-minded traders who come together to leverage their collective experience. So it's not about what you see here in the stream. It's about the leverage that is created by all the traders that have come together. Trader Lab's a professional community. Doesn't matter how long you've been trading. What does matter is that if you do come to Trader Lab and there's no cost for it, that you come here with the idea you want to build a business. And you want to separate the fantasy of trading, which we've all had, with the reality. And I'm going to suggest, depending really on your experience, but most of us come into this business with an idea of what it is. Don't ask me where we get it from. And then we go down a path of trying to get trading to fit what we believe it to be. But sometimes our beliefs are not in alignment with what the business is and what we're trying to solve for. So no matter the efforts you make, and we've all made those same efforts and walked in the same shoes, you may never have the ability to create sustainability unless you actually design a solution for the actual business you're in. I hope that makes some sense. So welcome for the Trader Lab. And if you're interested, there is a link in the bottom of YouTube that you can use to access Trader Lab. And remember, there's no cost for the Trader Lab community. All Bookmap Ltd. Materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room, but if we get into the live market, we'll talk about it. And also, if you're visiting in YouTube, if whether this is the first time or not, please be sure to give a like if you find the information shared here is useful. And also don't forget the Trader Lab is available to all of you. So again, welcome to Trader Lab. Now, today I'm going to talk about trading a two-sided market. It's called balance and what balance is. And yesterday actually set up short. Now, this is kind of interesting because while we're in a two-sided developing market today, yesterday's behavior set up a preference for short trades today. And it may seem a little strange. But if you look at yesterday, you're going to see that the market went up and then sold off later in the day. That basically showed us that we squeezed shorts yesterday and then came back inside the current range of yesterday. So we were squeezing and we might have hit an excess yesterday. So today we opened inside of yesterday's range, inside of value. And what this looks like, value was there, yesterday's value area high and yesterday's value area low, RTH open is here. So that suggests the possibility of two-sided trade. And for me, it also said the possibility of coming out the bottom. And still, we can stay and slosh around. It's trading and nobody knows, right? So what we do know is yesterday's low is here. And we also tested a key price yesterday. So it kind of puts us in a scenario where we might just stay in yesterday's range maybe have an inside day or not. My lean, it was towards the short side, though I did take longs because of a two-sided market. So, it's one of those things where in the Trader Lab, I always talk about when it comes to the business of trading, if you will, you need to have a way to define the condition of the market in some way that makes sense to you. You need to have structured or vetted trades that fit within the current condition of the market, which of course is always developing. And then you wait for the trades to come to you. You do not go after the trades. That requires patience and managing your emotional state. Of course, I don't want to miss it and all this, FOMO. So in your development as hopefully a sustainable trader, you need to anticipate behavior and your response to it. And over time, understand what triggers your emotional responses, and also develop the ability to manage the triggers, because we're all triggered emotionally. Fight and flight, fear, all of it's part of this. The need for certainty and confirmation, which is where most developing retail traders spend their careers as developing traders, and unfortunately most of them don't succeed. So if you come into an environment where that doesn't exist, then maybe we have to solve for something different. And I like to point this out because we all want certainty. We all want to avoid risk. We don't want to lose a penny. Of course. The casinos, though, seem to have figured it out, and they still pay the gamblers. So maybe we're approaching this the wrong way. Maybe. So it's not about wanting to pay the gamblers or the other participants. It's about we need to pay them in order to extract dollars from them. That model works really well for the casinos. So we already have a proven business model. It is really overlaying what we are doing with a proven business model. Now, whether or not we do the work, whether or not we only interact when we have a statistical edge that favors us, whether or not we can develop the discipline to only interact when we have an edge, these are all the variables, right? Trader Lab, we focus on the variables. We are ultimately the ones who determine whether or not we succeed in this business. It's not anyone else's responsibility but yours. So if you're waking up doing the same thing, trying to fix a process, and always coming back to the same place, it might be Trader Groundhog Day. And that is where you work hard, but you keep getting the same result. That is really a process defect, potentially, not anything, quote, wrong with you. And when you don't have an edge, all you have is emotional triggers. And emotional triggers potentially lead to inconsistent results, FOMO, and you're just being driven by the lunatic under the hood who I call Hyde. Okay, RTH open. Now, let's take a look at where we are. Again, we're opening in balance in range. Now, statistically, and what we anticipate is two-sided trade. Low conviction, rotational trade. That is the condition of the market. Now, let's not forget what happened yesterday. Short squeeze. Short squeeze. What does that do for us today? Shorts. Maybe. Or longs. Subject to your plan. For me, I've only taken, I think, one long trade. I'm not saying that's a good idea. I'm just saying that's what I did. Everything else for me was shorts. So, and that got a little testy this morning because, and here's why, but it doesn't matter why. I just took my trades and, like everybody else, I also pay the gamblers. Okay with me. Let's say it's not euphoria, but it is what it is. It's overhead and cost of production. Can you differentiate between how you feel and what you do? So what is this? RTH open. Now let's go take a look at this thing. What do we know? We're opening in range, in value. Value is where 70% of the volume took place yesterday, and basically we're in a fair area. Yesterday's retail price or highest volume was right here. So what am I doing? I'm opening in a fair area. What does the market do in a fair area? It tends to slosh. rotate. So I'm prepared for rotational trading. Now, the ETH, volume point of control, has a high probability. When we open lower inside of yesterday's range, it has about an 80% probability. Now, what does this say? Let's come back to language. The auction or volume profile is represented by volume. If we know there's a retail price or highest volume here, that's considered retail. Think of shopping. Well, in the ETH, which is the most recent auction, this is the retail price. They're really on top of each other. You know, I don't consider this like a big deal. So we're in balance. So if the market was short and we squeezed the shorts yesterday and then we came back inside, highest volume, then I'm anticipating this, you know, two sides. What we don't know, of course, part of the thrill is where we going first. Are we going to go take out the ETH low, which has over a 90% probability, 97% probability, past performance, not indicative of future results. So we can take out either ETH high or low. Pick one. This one has about 80%, past performance, not indicative of future results. We have the value area high, also possible. So it's value area high, value area low, ETH high, ETH low, yesterday's low, which is a target. And then after that, don't know. Don't know anyway, but definitely then it's trade management or you're done. So let's look at the opening. And by the way, if you have questions, please post them. I'll do my best. And if you're in YouTube, welcome to visiting the Trader Lab. One moment. Okay. So RTH open, in range, in value. This is called VPOC migration. Now, what VPOC migration is the first suggestion of the direction of the market. Now, again, everybody has to vet trades for themselves. I've shared 60 PDFs of structured trades that you can download. They're available in the Trader Lab, plus a library of webinars also in the Trader Lab on these processes. There is a difference between how the condition of the market and what pools or structured trades you use. And of course, you have to vet them. I don't trade things the same way. I am not a mechanical trader. Mechanical trading, well, let me just say this. You have to vet things and know where your edge lies. This behavior you're going to see here might be appropriate in certain conditions, and it might not be appropriate in others. That's why trading is not mechanical. I know we want plug and play. I get it. Everybody wants, but nobody gets, because business of trading is not plug and play. If it was, everybody would do it, and everybody would have ATMs in the basement. So I get my selling here, RTH open. Developing volume point of control is here. This is where the high volume is. Now it resets at RTH open, so it's at 0. So right here I see selling, and I break high. This tells me that these were absorbed. Why? When you get sell delta and it doesn't keep going, and then you see it reverse and the buyer's above the sellers, that says there's a passive buyer here. Then I get a VPOC migration. This says higher. Now, higher for me, because I'm in balance, doesn't mean I get long. It means I wait, because I do not want to trade in the middle. And this is very important here. Let's take a look at this. This is the opening swing low. So I know there's going to be stops on both sides of this thing. Opening swing low is kind of the, while the market could open and always do anything, if we're opening in two-sided trade, this is a target coming down. Okay? So I already know if I take shorts, I'm going for this. So let's watch. This is the new retail price. I hit this liquidity. I've got absorption here. These are buy stops, and I'm anticipating counter rotation. So I'm watching this. This is a high probability target. It is rough. And the thing about probabilities in this condition, they're still usable, but the context or condition of the market supersedes statistics for me. I understand we have a 68% probability. Does it matter if I open here? Really? If I was to get a trade here, which I can't enter here, and I'm going there with liquidity, does it matter? Doesn't matter to me. I'm not trading this. I'm waiting. Because my thesis is shorts have the potential. So and I see VPOC migration again. All of that is suggesting we're still going to reach higher. And I have this, what was it, 80% probability? So now, just so you guys know, there is not a right or wrong in trading. You could be taking longs and you would be going here because of 80% probability. All we're doing here is coming out, coming back to retail, and coming back to retail. This is still balanced. So this is mean reversion. It's not, there's no right or wrong. So I get here, I get this. Full session VWAP is here. I took a short here. This. Break high, absorption, passive side, sellers below. It is a sell trigger. I took a short. I am going for this. Okay. And I got taken out. My scale was mid and I got out. I got taken out. That's a scratch for me. So, you know, two-sided trades. So this is, see what's going on here? I'm trading both sides. So this was okay. This is fine. You know, coming back, no problem. So that was my short. Okay. So this one, I took the same trade again, trying to come here. Same trade. Got scaled. This time I thought I had it. Nope. Been taken out. So I'm going, all right, tough guy. You know, it's like, all right. So then no long for me. And then I'm still looking for shorts. So, and now once I get this, you know, I'm starting to think of myself, well, what do I have here? I have the value area high. I have settlement. And this is my next area to be looking for a short. I get my liquidity right here, break low. Buyers are here, right here, break, 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 break. I took a short here. You know, I feel like, gee, working hard. And got a scale, you know, same thing. Got a scale. Now holding. Now VPOC migration. This is a challenge for me because what this is suggesting is this distribution is too low. I'm going to label this. I'm going to call it a variable high volume node down below. I label these things. And there's also, let me see where else. You know, down here. This line here, which I didn't mark, you see what's happening here? If this is too low, I get absorption. If it's too low, I get absorption. If it's too low, I get absorption. When I'm taking these trades, I'm conscious of this. Now, I am going for that. So I'm just saying. So for me, when I reverse off of these, I have an option. And this is, I'm not giving recommendations. If I understand that the market left a location behind and has now shifted away with high volume, the language of the market suggests this might be too low. And that might be too low, right? Here, let me put this one there. So these, I call that VPOC migration. I made the name up. I didn't know what to call it. When I was figuring this stuff out, it was many, many years ago. at the time, nobody was doing this. So, okay, I did it. And it was not, when I was first doing this approach, using this process, it did not fit your dogmatic market profilage, you know. So I got pushed back, and it was amazing that other traders were not interested in my research, which I guess is okay. Absorption is here. Absorption is there. This price is too low. Notice where we come. Notice where we check. Notice where we check. These are all longs or short covers. Now, for me, I wasn't trading the longs. Here, I'm still looking at the shorts, okay? So, just so you know. So, there you know about VPOC migration. Now, this is now the current retail price. So what this is suggesting, and this is a language again, all right? I don't use indicators in the standard sense of how you guys approach the market. I just sort of read the volume and the activity of the participants. This is saying this is too low, and this is what separates that. This is called the low volume node, and it separates these two. So this moves up, says this is the new retail price, that's too low. So I know now that shorts, if I'm taking any shorts up here, that I'm kind of standing against what might be acceptance of higher value. So these become more problematic for me to short. So let's watch. See what I mean? So now I am not on the shorts until we come up. Now, this might be very confusing, naturally, right? Because of two-sided trade. So we get this. This is a report at 9 a.m.? So that wasn't a report. I don't know what this was. If that was something, or it was Powell. So here we take out the IB 30, 9 a.m., and then we have the initial balance high and low. The statistics to take out either the first hour's high or low are 98%. Now, I'm still kind of inclined at this point, because we have not taken out the longs with stops under the opening swing low. I'm still looking for shorts. So I haven't had any longs yet here. And I'm thinking, gee, maybe you missed the bus, as they say. Well, here's what I know. I break above this, and so I look at this as support. I'm looking at the settle, which has a high probability, a good statistic. It is, you find it, and everything, is, it's about a 74% probability. So I know that this has a high probability, and I know that I also have a high probability of taking the first hour's high out. And there's another thing I know, that we have the possibility of taking out either the first hour's high or low, or both. So I'm thinking, since we're in two-sided trade, that we can slosh on both sides and abuse both sides, take out the first hour's high, the first hour's low. So I'm prepared for that. And what I tend to do, now the higher time frame is up, right? But what I tend to do, for me, is I trade either side, doesn't matter. I do like to align with the higher time frame, but I also know that we squeezed shorts out yesterday, and if we don't get buying above yesterday's high, then the longs can just as well get abused like everybody else. So anyway, if we're long, you'd be going for this. And I always say, if you're going for targets, everybody else knows the targets. Everybody knows the same stuff. As far as some of these statistics, they don't understand context. There's a lot most traders don't know, but more traders understand gap to settle, basically, internal gaps. So you would scale this in front, or trade management. So I'm looking at this and I'm going, I don't know. So, but this is right here, a key level. So I took this out, I'm above it, and let's look what else is going on here. So I got liquidity, I get my sellers here, my buyers are here. I don't know. I'm just sitting here going, I don't know. And I break low. This becomes resistance right here. And this is my support. I break below it. And so this, I have two areas to get short. There and there. I took a short. Now I'm coming here. Scale, and I'm trying to come out the bottom. Remember where the stops are. And I'm kind of asking myself, because, in Trader Lab, other traders are long, some are short, some are in the hammock. Anything can happen. So right here, I'm short. This is my next target, and then I'm looking for the ETH low. So this was okay. I'm all right with this. So that was a nice trade. Now I'm looking for this and maybe yesterday's low, but that seems like not likely to me. So my targets are this, 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 and then this, low probability to me. Trend up. And yesterday was a key location. This low was aligned with a primary target, which I won't go into. This is all available in Trader Lab. So anyway, this is where I was trying to go. But now let me give you the but. The but is we get the stops here, and I see a sweep. When I see the sweep, the potential then is to mean revert. And so my teeth start chattering. So let's look at the behavior. Sweep. So right here, this is saying to me, be aware of the potential when I get under here, if I do, to come out and then do mean reversion. It starts there. Let's look. Sweep again. 682 sell stops. Thanks for playing. They get a coupon to the buffet. So this was my next target, and then just one for the, for wherever. I got the sweep. I'm watching right now. Now let's watch closely. See where we go? Mean reversion. I took long. This is called the IBF. It's a reversion trade. The idea is to come here and continue. Okay? So I got this. I got that. It's neutral. Going to the moon. And not so much. That's okay. Watch. So now we come down. I've got my ETH low, potential target, right? And what was that probability, you ask? 69%. Past performance not indicative of future results. Are you guys with me? How are we doing in YouTube? How are you guys in YouTube? Elvis, I don't trade Bitcoin. It's not my market. This stream is really about helping traders understand market mechanics, how the market works. This process is applicable to any market as long as there's enough volume. Then you have to really tweak it a bit to the idiosyncrasies of the specific market. So if you're going to trade oil, all these trade a little differently. Gold, bond, it doesn't matter. I've traded across most markets, not Bitcoin, but most futures markets, commodities, if you will, and then of course indices. But and this is a generic process of market mechanics. Then it's a matter of tweaking it. So Bitcoin, you can trade anything. but you have to vet it. So this is, once you understand how the market works, you're going to experience it differently. So we got our stops. Now we have, and we're just above yesterday's low. Now I am looking for the same trade. This trade is mean reversion. That's the mean. Out you go. Thanks. Enjoyed that a lot. I get the coupon to the buffet. Now, and that's a scratch for me. Now I come back and I see here, I see my buyers down here. I'm seeing the icebergs accumulating, and I got the stops out under here. And I got my coupon. Make sure you always get a coupon. I'm at yesterday's value area low, so I'm inside still of what's considered a fair price. And the market in balance, which is what the condition is, it's like a rubber band. It gets pulled outside, it comes back in. If it gets too high, it comes back in. And of course, the market can do anything. You know, we have tweets, we have a vote on the wonderful bill, you know, tax bill, that whole thing. So all that's going on, and all those inputs are going to impact the market. And you always have to use good risk management, and don't be opinionated, be fluid. Trading is a fluid endeavor. It's a rhythmic endeavor. It's a dancing endeavor. I always think of it like a foreign language, playing a musical instrument, or dancing. You know, it's sort of a flow state. The other part of this is it isn't mechanical. And yet, when we're learning to trade, we can only do it mechanically. But it's not a mechanical business. It's very much a flow-based business and an art. Anyone who develops into a professional in any endeavor moves from a mechanical, first of all, we're incompetent, which we don't even know we are in this business. Then we might become consciously competent because we've laid out plans or a track and we're trying to stick to them. And then at some point, it just flows. And that's where you need to go. And the only way to get there is intentional practice, replays, screenshots, and really make it your business. It's no different than an athlete who watches tapes, goes out on the court, practices hours and hours in drills so that everything is fluid and they can just respond and there's no conscious thought. That's where you need to be. If you're not there, time to get to work. Come to Trader Lab. So let's look at this. Buying icebergs, chop, chop, chop. I'm outside of the initial balance. My target here is the ETH low. Tag it. And what do I see here? I break high. So now I need to get long, and I'm looking to come back here. Let's watch it. So there, I'm trying to remember. I got to go back and look at my screen. Hold on a second. Where was my last one? Okay. So this, I did not take because I was already done trading. This is a trade to here. I don't have an entry here. So when this breaks high, if it doesn't come back and check it, then I don't have a way into it. Oh, there you go. So much for that idea. There it is. So sellers are there. Sellers are there. This is your trigger. Now, the idea of this thing is where the buyers took over. So what we want to know is, where was the last place? There's two places. This is an outside edge, and this is a distribution. So think of it this way. From there to there is an auction. And this is a way maybe to think about how the market works. Because the purpose of the market is figure out what's too high and what's too low in all fractals, all time frames. So as an example, this is where the sellers were and the absorption was here. See the red delta. Why isn't it going down? Because the icebergs are here. Sell stops come out. They're taking the other side. I like to see the sell stops, as long as it's not mine, you know. And so, of course, it often is. Break high. So the sellers were here, and the sellers were also there. Let me show you again. I want you to see process. Not magic. There is no magic. And no holy grail. Still looking for that, except I'm not looking for it. Let's come over here and do the same process. And I'll show you what I'm doing. Think of this in a way like Matryoshka dolls. So this is the little Matryoshka doll. It's an auction. Too high, too low. Too high, too low, break high. What this says now is these sellers are under the bus. There's also sellers here in this one. Too high, too low, too high, too low, retail. If I leave it, it's too low. So I have the same thing here. Too high, too low, too high, too low, retail. I'm out of here. Let's try it over here. Too high, too low, too high, too low, retail. I'm out of here. What does that tell me? Now, if I put these two together, this is called a low volume node. Let me just give you a little sense of what this is. You'll kind of see it. So what I'm doing is, and this is called trading in fractals. Each of these little operations here are auctions. Oh, I'm not paying that. Yeah, but it's on sale. Retail price. If this high volume in this fractal is too low, we're going to release the energy in here, and it creates that. If the same thing happened over here, too low, too high, and I break under it, this is now resistance. This is resistance. Well, when I take these out, now resistance becomes support. Now I can't get on this. And this is the target. It's called mean reversion. Well, so I know if I come outside, because I'm inside of value, don't forget, and I got a target down here, and I didn't get the stops under here. Look at the information. Why would we not get under here? Ask yourself, because there's going to be sell stops. Why wouldn't we do that? Might we do it? Yes. Will we do it? I don't know. What does this tell me? Too low. So if I find too low, and of course I can't get on this thing, then if I rotate outside, back here or even in this area someplace, I can buy it to come back there. Long story, as they say, short. So where's my location? There. Okay. LVN, outside edge. Let's just see what it does. Oh, there you go. That's a long. Up to you. It's saying it's any good. And why is it a long? Because the high volume is here. And if we found too low, and this is what sets up the long from here, then if we pull outside, and I know my buyers got very enthused over here, and this is too low, I can then look to buy it on a test, because I'm looking for these buyers, and I don't know where they're going to come in. So I'm looking for those buyers to come back in. And it could be anywhere in here, okay? But my stop's got to be under here, or at least under here, okay? So right here, I get my buyers, absorption. This is a trigger. It's a compound trigger. Let me show it to you. Now, this might not be your thing. I'm not saying it should be, you know? I'm just saying you can learn this if you're interested in it, you know, in the Trader Lab. So this is a long. Now, here's the trigger. Absorption is here. There's the icebergs. There's the stops. More coupons to the buffet. This is when your broker sends you a gift basket. Have you ever gotten a gift basket from your broker? So the sellers are here. The buyers are here. We rotate down. There's your trigger, or this is a trigger. It's up to you. And I would be leaning against this because of why? Let's come back. outside edge, too low, too low, too low. So outside edge, very logical. And that's the fair price. So it's, think of it this way. Oh, I'm not paying that. Oh, it's on sale. Retail. You go to the store, your can of tuna is $1. You can buy it at 75 cents out here. You throw 2 in the cart. And then what happens? The sellers raise the price back to retail. This is shopping. And that's trading. You're shopping. So too low, back here for scale. Now let's come the other way. And I'm looking for what? A neutral day. What is a neutral day? To come out the top. Right? And why? Because we're in balance. So the next target on the hit parade is this. So if you've got this, and if was not with you guys, and I love being with you, this is my last long, scale is there, stop stays under here, and then I'm looking to squeeze. What am I doing? I'm taking both sides out. Why? Because the market's in balance. Specific plan. So for the most part, and actually for me, it is only outside in trading. It's not inside out. I don't trade here. I target it because this is called mean reversion. Underline the term mean. Is everybody tracking? This isn't complicated if you have a plan for it. Yeah, Lee, I think I covered them, right? Yeah, hey, Fred. Good. How you doing? Thanks. Thanks for saying hi. Elvis, yeah. Elvis, have you left the building? Or you're still in the in YouTube? For lot tie, the market is not indecisive. The market is balanced. Yeah, non-EO2. Yeah, it's all reversion trading today. Now, here's the other thing. You know, we're talking about this two-sided trade. The higher time frame is up. Yesterday, we squeezed shorts. The market goes up to go down. The market goes down to go up. Yesterday, the market went up to go down. Today, the market goes down somewhere to go up. But yesterday's low was really a key test of a level. And the fact that we didn't get it when we had a shot, look how close we got. What does that tell you? Language. On sale. And yesterday's low, too low. What does that suggest? Get long. For what? To squeeze out the new shorts. You see? Is that logical, everybody? Please give a like if you're visiting in YouTube. You might not like the market, I understand. But it is, you know. Any questions so far, by the way? So this is the next target up here. And this trade can be done or it's trade management. Are you guys tracking? All this is very simple. It's called mean reversion. So what we're doing is we're trading rotation. This is all it is today. Now, for me, it was all primarily shorts until this. And this was, you know, to me, this was a question, but it didn't, you know. And again, what makes it so important that it's if this, then that, which was the shorts. If we don't get here, if not, then what? Then that. Is that logical? If this, then that. If not, then what? So part of this is understanding how the market works, why it does what it does, and how you might get in alignment with it at times. Now we got our a sweep up here, I think. Let me just make sure. There's a sweep there. That suggests potential for counter rotation. So now I'm not, of course, I don't call trades. Everybody takes stops. You don't want to take my stop. You know, why do that to yourself? What we want to be looking for now, don't forget the higher time frame is up. And here's another little tidbit for you. Now I'd be cruising here looking for a short, and not here necessarily, just starting to look for one, and we'll see what it does. But and it doesn't show up, then I don't have one. I'm just, you know, a tourist. Doesn't matter. If I take a stop, other than how I, quote, feel about it, it doesn't matter. I take them just like you do. What's the big deal? I know emotionally, get distraught, right? But in the nature of the business, it's just part of the business. So the probability of taking out the ETH high, because we did get the ETH low, I think. Could somebody confirm that? Did we tag the ETH low? Yeah, hey, yeah, I got it. So this is a short for me, not a recommendation. Microstructure going here. Okay? So, and remember, I'm not here to call trades. Everybody takes stops, and I'd be terribly upset if you actually took a stop based on anything you see here. It's really about understanding how the market works. So this is where we're trying to go. The other part is, if we can get here, then there's going to be stops sitting here, mechanical retail buyers. And it doesn't mean they don't get paid. Remember, the gamblers get paid. So we got to see what happens on this. So if you took a short, you would be scaled, assuming you're running a 3-point scale. What I do, my stops are just a little bit over structural failure. Because if the market comes back up here and we get some stops, these icebergs may absorb the buy stops. That's kind of a way I think about this. Like here, see these buy stops going off here? The icebergs were absorbing. When we came back up to this price where the stops were, the icebergs are still there. So I know we have sellers here. Now, if the market rotates up, I can anticipate, not predict, that we will get absorption. That's what this is. So the short here is called mean reversion. So my plan for today is what? Reversion trading, outside in, no inside out. And it doesn't mean, and remember, it's not that inside out won't work. It's that it does not have an edge. That's all. Everything works. You can, Magic 8-Ball works at times, but it does not have an edge. So you're doing this, you trade with your edge, and you take your lumps with the rest of us, because overhead and cost of production is part of every business. I'm just saying, So now we'll see what this one does. It can do anything. It can take this out, so what have we done so far? We have what's called a neutral day, about a 30% probability, maybe a little less. That's subject to a discussion we're having in the Trader Lab. Neutral days means two sides are active. So the higher time frame typically is not active on neutral days. It's basically balanced. So it's, kind of sloshing along. So this trade, whether it works or not, that's not my job. It's just take the trades that align. Now, that doesn't mean this won't make a new high. has nothing to do with that. This has to do with something called context. Context is two-sided. So I'm only taking outside in trades. And of course, there's days you go, well, that seemed like a good idea. And then if something changes, your plan changes. Right now, nothing has changed. So this is would be my last short. There, and then, because here's what's really going on here. Longs are in here. Shorts come in here. What happens to these guys? They get thrown under the bus, maybe. And then we're trying to come here. Then the shorts come into this leg, and what's going to potentially happen to them? We're going to rotate and squeeze them. So this is a specific trade plan. So you could learn this in Trader Lab. I'm not saying, you'd be interested in it, but when you have days like this, and one of the problems for us as retail traders is that we tend to do a plug and play thing where we treat every day the same, and we're thinking that we have an edge. Well, when you curve fit, which we all have done or do, you're trying to put the market in a box, but the market doesn't operate that way. So you're trying to fix maybe a defective process. That's why I agreed to do Trader Lab when Bookmap asked me if I would, do a room, if you will, in the stream, is because we've all done the same stuff, and we've all been mechanical, and we've all gone and curve fitted indicators and everything to create what? Predictability. Confirmation, is that terminology in your language? Very important you listen to your self-talk. It tells you a lot about your beliefs. And what I now believe in trading is I can only control myself. I cannot control, the other participants or news inputs or somebody tripping over the cord at the CME. By the way, somebody did trip over the cord at the CME many years ago, and all the data went down. I was trading large S&Ps. I have to tell you, that was not an exciting moment for me. I used to trade size. So anyway, neither here nor there. Anyway, this is where you're going. So that would be your scale, not here. I always give it 2 ticks, 3 ticks. And then now you're hanging out and you're working on your crochet because where's the stops? Here. So the buyers were here. See the absorption? When you get this delta, the buyers are here. The high volume in this right here is there. So these are all distributions, too high, too low, retail. I'm not paying that. I'm out of here. Too high, too low, retail. Too high. I'm not paying that. See, what's next? This one or this. Where's my buyers? They're here. So this right here, you can see it there, is my outside edge of this distribution. Sellers are there, sellers are there, sellers are there. The buyers took control. Now this might be news related, right? The beautiful bill. So, and if this is too low, I can come back here and maybe out the top. Doesn't matter. As long as I get here, I'm in good shape. And after that, it doesn't matter to me. Stop could go at break even, at my entry, and then it's still been a nice trade because I'm in balance. The preference, and it's not up to me, is to come under here and get the stops out that are under here. So we'll see what it does. You have questions, guys. This is trading balance or mean reversion. And we always joke in Trader Lab, yeah, it's mean. You know why it's mean? Because traders are chasing this thing around, and it's FOMO generative, and you're gonna lose your mind in this unless you're prepared for it and you understand what it is. This is a really nice short. You got the buy sweep, which suggests counter rotation. You have the sellers below the buyers. You have the test, and this is a beautiful short there. Now after this, there's no idea, because here's the language of the market. This is too high. Okay. If this is the retail price, so that's the reversion trade. Then if this is too low, we come back and we can come out the top. Or we just rotate, come back to here, which was where my sellers were. My buyers were here. They got run over. Sorry, Charlie. So right here and here is resistance. So support, resistance. If I get under here, down to there. If I don't, say la guerre. Trading balance. You can learn this in TraderLab. How we doing? Roy, I don't factor in news if a report. If I know a report's coming out, depending on the report and my position. If I'm risk neutral and I've got a great trade location, and the market participants are telling me maybe the report might be one thing or the other, I will stay in. Typically, I don't trade into big reports. It just doesn't matter. There's so many structured trades that show up that I've shared in the Trader Lab that there's always a trade. I mean, I might have to wait an hour, or maybe there will be no trade, and then I don't have a trade. I just sit here and wait for the bus. Here's the thing about trading. Are you chasing the market? Not you, but collectively. Are you chasing the market thinking, oh, I should have got in here. Oh, I should have got out. I'm long. I should. How about this? The questions are answered before you come into the market. The market is 100% random 100% of the time. So if we can accept that, it's no longer our job to be right. Our job is to wait for trades that we have vetted that have a statistical edge. I know I have an edge to go there. That's what I know. After that, I don't know anything, except context is two-sided, and both sides are going to be equally abused. These longs, their stops are under this swing. These shorts, their stops are going to be over this and, of course, over the high. So I know that. So if I'm going outside, I'm coming here. If I'm getting long, I'm coming there. So that's mean reversion, you see. So that's what I know. I don't know anything else. But the news, I really trade with the participants, the language of the market. So and news can come in any time. So, you trade with a stop. And if it's something really out of left field, an outlier, you're going to get skidded just like I do. You'll get filled and they call you next week. I used to be a high volume trader in NQ. And this is back when it was, everything was on the floor and literally, and it was all done with a timestamp, and you'd write your order on a piece of paper, timestamp it, pick up the phone, call your guy on the edge of the pit, bang, bang, bang. And you'd get your fill right away. But if it was really crazy, they wouldn't get back to you. It'd be like, where did I get in? I don't know. Oh, my stop got hit. Where did I get filled? Yeah, we'll call you later. And in the NQ, especially because it's a very thin market, that could be hazardous to your financial health, because if there's nobody, it depends where you are in the queue, and if there's not any depth, they'll just get to you when they do. I always suggest trade the ES if you've got range, because of the depth. You've got a much better chance, much better risk management in a deeper market. So those of you who like to trade thin markets, you need to understand the risk you take. And if it's a thin market and there's less resistance, which means liquidity, then the market, if it has less resistance, can have more volatility, more range, but more risk. It's all proportionate. Hope that makes sense. And we do have NQ traders, of course, in Trader Lab, and we have other traders that trade other markets. It's not about anything more than learning how to trade and looking at this as a business. Remember where we're trying to go. Somewhere. I don't know where the market's going, so it's not my job. I just go, well, where is it going? I'm as clueless, but not ignorant, and curious. But what do I know? Where's the stops? It's under here. Where do retail traders put their stops? Under here. Am I going to buy the mid and the VWAP? Me? No. You got to follow your plan. Why wouldn't I buy the mid and the VWAP? Even if it might be the trade of the century, because my plan says stops are here. Retail traders put their stops here. What else do I know? That if we get under here, this is next on the hit parade. Also, I know that I can get mechanical retail buyers at the VWAP in the mid to come back here. Not a structured trade for me. I do not trade the VWAP to VPOC. And we have a structured trade in TraderLab, mid VWAP to VPOC. But it's not qualified in my trade plan for this condition of the market. I do not take that trade. Other traders will. And they get paid, of course, and they take stops, which will happen no matter what, right? So I just trade the trades I have vetted that align with my psychology and the range and behavior of the market. And it doesn't matter to me if this goes and takes out this high. It just doesn't matter because my plan says you don't do anything here. It's a target. Hope it makes sense. Yeah, well. So how are we doing, guys? Let's remember what is happening on these swings. We have our sellers here. We have stops here. The market could come up into the stops and then we can rotate. So this is definitely at the moment. And I say at the moment because it can change. This is a nice short. I really like this one. You know, can you guys see the short concept here? Why it might be a short? Does anybody need this clarified? Why you would be short if you're trading mean reversion? Please give a like if you're visiting in YouTube. Remember, the Trader Lab is available to all of you. There's no cost. You don't need to be a Bookmap subscriber. It is open to everybody. The idea at Trader Lab is to leverage our collective experience. I'm doing this 46 years. Our senior trader has over 50. And we have the full range of traders. And it doesn't matter the methodology you use. What matters is if you're not profitable, do you want to try to reverse engineer it, maybe figure out why you're not profitable, and then maybe change that? Because it's not about working hard. We've all done that. It's about the randomness that makes us think we're on the right path because we all have winning trades. Let's remember, the gamblers win. But that doesn't mean they have an edge. So over time, even with winning hands, they still lose. So we will have winning trades. And yet, if we don't have an edge, we're going to lose. It's just math, you know. So if you can understand how the market works, you might be able to extract a statistical edge for specific trades that align with conditions like today. And then, even though you're going to take stops, just like the casinos pay the gamblers, we pay the gamblers too, over time extract the dollars in a random distribution of outcomes. The maddening part of trading is the randomness. But in our human nature, if you will, or our reptilian brain, what it's all about is avoiding risk. So we all go down the path of looking for certainty. You know, I don't want to take a stop. Who would us? I don't want to pay bills either. But the casinos, I'm sure, would prefer not to pay the gamblers, but then they wouldn't have any gamblers. So they pay, yet, in spite of paying the gamblers and giving you the cocktails and a ticket to the buffet, maybe tickets to Adele, and the rest, they're still making terrific profits. How do they do it? Well, if we can figure out how, which we have, that it's just gaming in a random distribution of outcomes, then maybe we need to do what they've done. Solve for only playing games that have an edge. And for us, it's structured trades. And then you don't trade. You don't have an edge here. You're just hanging out. And where's our resistance? It's this here. And we can squeeze these guys and then continue lower. So we know this is an outside edge here. We know there's stops at the outside edge. And we know, and there's stops right there, that if we can't get above this, then we can come back here. If we squeeze through this, then, we can keep going and the trade would be over. So let's watch what it does. This is as deep as this gets, you know. So if it's not about being complicated, it's really about keeping it simple. I did a primer webinar, and it's available in the Trader Lab. And like I said, there's a link in YouTube if you're inclined. And there's a whole library of webinars I did, some up to 5 or 6 hours long of real-time narration if you're inclined, if you have the stamina. And you might want to watch it while you're hanging out on the 4th of July here in the U.S. Throw something on the Barbie, a little shrimp on the Barbie, right? And, you know, watch it. Or, you know, if you're inclined. But what you're going to see is, I found that the thing is, if you're operating in a random environment, you need anchored inputs. In other words, always do the same thing that is aligned with the condition of the market. And then whatever happens, happens. You know, the casinos don't change their games. They don't skip the next hand if they pay a gambler, right? What do? We don't do that. We take a loss. We're all emotionally involved in it. We get angry. We want to make it, you know, all those human tendencies, that emotional triggering, that's what will take you out of the business. When I get asked what's the hardest thing about trading, I'm going to say is managing yourself and only taking trades with an edge. So there's two problems. One is managing yourself, but how do you manage yourself? How do you get to be able to? Knowing where your trades are that have an edge. If you don't do the work in advance and bring your plan to the market, and you will pay the other traders. I mean, that's just overhead and cost of production. If you're making it up here, what should I do? That looks like a short. My indicator's saying this. This one says go short. This one says go long. Am I getting long or am I getting short? Am I doing both? What am I doing? Well, if you don't know what to do and where to do it, then you're just gambling. Be sure to get the cocktails. I'm telling you, you're going to probably want a few. So what do we see here? I got my buyers. I got buyers here. I got buyers there. I have my sellers there. There's buy stops here. And this is an outside edge. So I have to watch this area. If I come out here and I get sellers, these guys, sellers were there. There's your icebergs. Now my stops are coming out. Now we want to see if I attract sellers or if the sellers can keep going. Higher time frame trend is up. This was my last, would be, didn't take it, would be. But this is where the main aspect of this trade is. So if it's too low, I can keep going up and then the trade's over. But the idea of the trade is to come there. So now we just see what it does here. And it's not a recommendation. Outside edge is up in right in here because the high volume was there. We'll put a little, we got a couple little areas. So here, there, and outside edge. Mean reversion is difficult because we don't know where the outside edge is. That's the thing about it. Nobody knows. So, you know. So, is it longs or is it reversion? Well, there's our reversion. So now are we pushing out to pick the stops off here and then get our absorption there? And here's why I'm going to ask you the question. If the sellers are here, there, you see the red delta, will they sell it again when we come back up? So far, yes. And what does that tell us? Maybe back here and this time out the bottom. Now you know what the mean part of mean reversion is. And it's not a recommendation. Does it make sense? Gut Bowl, hi, welcome to Trader Lab. Are you asking me the question, do I increase my trades based on expected value? Is that for me? How we doing in YouTube? How you guys doing? Ben, did you see the short? Skag, yes. I'm not sure if somebody's asking me a question in Trader Lab. How about a like? Oh, okay. Do I increase my trades? Does that mean number of contracts, or does that, I'm not sure what you're asking. Um, no, I pretty much, the content, I think you're asking me if I'm adding more contracts. No, I don't do anything different. In this condition, I don't trade the size I trade in a different kind of market. You know, when I have outsized targeting based on statistical probabilities, I do run, uh, let's just say, more. In this condition, it's almost like I'm in the golf course and I'm trying to get out of the sand trap. You know, I'm just trying to get on the green, which is to literally get green, which is there. So when I'm trading reversion, I'm trading stops. So what I'm doing is I know there's stops there and I know there's stops here. And and this is what's important there, the delta, the iceberg. When I lift up into the stops, which is there, and there's no buying above it, the sellers here who thought this was too expensive, I call this a stop pick. This is a short. And again, it's back here. And I'm still looking for this. So the idea of the trade is and I'm always very conservative in mean reversion because it's two-sided. So I'm always going to cover my risk. So that's a distance from entry to stop, which would be right here. And why would my stop be there? Because I already took the stops here. And this is not a recommendation. It's just the way I think. If I'm going into stops who are buyers, and then I don't get buyers above the buy stops, then it's what I call a stop pick. And if it's a stop pick, and the sellers that were over here, where the stops are also, come back in there, then I'm looking for a rotation. And then that can take me here. And if it doesn't, and then I'm looking risk neutral. Now, if it comes above here, trade is going to be, as we say, goes to the happy hunting ground if I don't get here. So that's it. And if I do get here and I get under this swing, there's going to be stops for these guys. So I have the following. Stops in this leg, stops in here. Now I squeeze up to that swing and this swing. Now, if I get above here, trouble. So once I get the pick and I exhaust and I anticipate a rotation. Now, getting here is the primary objective. And if it doesn't do that, then it doesn't do it, and that's the end of it. Let's see what it does. Resistance is there. Let's watch. Not recommendations. We're just hanging out. We're tourists. This is really a special plan, and it's a different plan. I go over these in Trader Lab, and I decided I would, that's the nature of the market. We're going into the holiday, 4th of July coming. Market will be closed on the 4th of July. All of us will be grilling. No, Gaboil. The number of contracts I trade is based on the context. When I'm moving directionally and I have probability targets with range that are outside, I'm going to trade to them. In a balanced market, I'm only trading rotations. So I'm really looking to trade into the stops. When I'm in balance, I'm trading into the other side because most retail traders, and when you have this kind of balance, the higher time frame is not really active. It's us. It's little traders like us, the minnows. So the minnows are risk adverse and they're running tight stops. So where do they put their stops? Well, their stops are going to be there. Their stops are going to be here. If I start coming down, the longs in here might get liquidated. So, and right now I have this here that would suggest the counter rotation up. I have to see if I come back above here, this trade may fail. And that's okay. This would be risk neutral. I just go, all right. I don't have what you call high expectations. patience because of range. And this range has to fit my risk management. So if this range compresses too much, then I have to stop trading because it's risk reward. I know in this condition, I have a good chance of coming back here and coming under here. I also know I can take a stop with everybody else. So, but that's the trade. So this is trading what's called mean reversion, two-sided markets. And I don't think of this as scalping because we have the range, but I do think of it as being very patient and thinking like a retail trader, but not acting like one. And where else are we looking for? Why? Retail trader behavior. What do? They buy the VWAP, they buy the mid, and in balance, two-sided trade, they are not qualified for me. Not a recommendation. You got to vet this. I am looking, and of course, here's the other thing. I can get a rotation off of here. It's not a trade I can take. It's a target. And where's my stops? Here's where the buyers were. See the iceberg, see the stops. Those red bubbles are absorption. If we can get out here, I can also anticipate buyers out here. So I would just sort of be going, into this, and then I can just say, trade's done. Get back in the Barca lounge. Are you guys tracking? How we doing? Please give a like if you're visiting in YouTube. Help support the channel. Remember, there's no cost for Trader Lab. There's a link down there if you're inclined. Feel free. Now, remember where our volume is. The buyers were there. See? There's no way to know, by the way. See where it is? There. Sellers were there. Buyers took control. Buyers are back in here. Subject to your plan, you could go up. I'm out of here. I don't know. I don't know if that's what you want to do. This puts some burgers on the grill for the weekend. So then, right here, if we get back above here, that if you're trailing, you would have your scale and wherever, and you could be out of this thing. And that's it. The trade's over. This is the reversion trade. If we can get under here, and we might still get under there. Don't know. So let's see what it does. This is some pretty good buying. Iceberg, you see them there. When I'm looking at this stuff, I'm looking at this. I'm looking at out here, the low volume node, because that's where the aggressors came in. So you could see the thing with this reversion is you're trading outside to here. If we get under here, you're going to come down to there. You don't get under this, then you revert back to that. It's think of it in fractals. They're like Matryoshka dolls, Russian dolls are inside each other. So this to there, and then to there. If you can't get there, you're going to come back to this. And then maybe now you got the shorts in here and you got the shorts in here. Now, and you got the longs in there. Now, back across the range. So now we are looking for these guys to get squeezed. Let's see what it does. It still has to clear micro high volume there, and it's clearing this volume, so it may still continue up here. So let's see what it does. So for me, I'm just trading the rotations. It is kind of like golf in a way, because you're just trying to, primarily you're doing that. This would be the bonus round. So let's watch. Questions, guys? And this is where our sellers were. And our stops are here. You can't get above this. We have to watch this behavior right here and down. And now I can't tell you what it'll do. That unfortunately is not in my playbook to predict. But what I can tell you is what it might do, and I can tell you where it might happen. I don't know what will happen. So let's watch this. sellers were here. Here's my liquidity coming back in. Let's see if it impacts. It's skewing the book. Let's watch here. Stops are coming out. We can still pick, but we got to watch this. This is very important. See the fight? Sellers are there. The buyers are here and there. So the buyers are here. Why? I have red delta, which is the sellers, absorbed. Up here, I've got the buyers absorbed. And it's kind of like a battle. That's when you see these consolidations, sellers, buyers, one side is going to win. Huh? I don't know. Let's watch. What do you think? It's like if you had to pick a side, as they say, gun to your head, which side would it be? Rotation and volume inside the day's total balance volume. So would that make you fade aside? RP, I just trade the structure really. I mean, what I'm doing is if I'm reading the behavior and I see like here, these buyers, and I know I got my sellers here. Once I come across this, these guys are done. The sellers are over for now. Then I got to see how far up we come. It's really two-sided, you know. It's just so it is very. This is really the thing. Is coming back here. Now it doesn't. Now the higher time frame trend is up. It doesn't mean that we won't get up here. That's possible. Because this was a target for yesterday and we missed it by, you know, and this could be a direct hit. You know, the thing with this is you don't know if this is too high or if it's still going to get cleared out. This is a target. And the thing with the market is it doesn't have to hit these things. It could get close. And if it's too high, it goes the other way. And yesterday looked like a short squeeze and then we reverted back in. So today, potentially the same behavior. So I don't know if we're going to take out this, but here's a statistic for you, just to kind of mess with you a little bit, because we always work with statistics in TraderLab. Taking out the previous high or low has an 87% probability. Well, let me make sure I got the right one here. Yeah, past performance, not indicative of future results. So how do you deal with that? Which one? Well, we didn't get the low. Does that suggest we're going to get the high? Question. You see? So we're in balance. So we're trading mean reversion. 87% probability to take out yesterday's high or low. And, well, we didn't get the low. What does that do? How do you function in the conflict? Trade plan. Not predicting. It doesn't have to do it. It doesn't have to do anything. It doesn't have to take out either the high or low from yesterday, though the statistics say good chance. And then if I look at the statistics specifically for the previous low, it's 53%. What about the previous high? Let me see. 41%. We didn't get the low, and the high has a lower probability. What do you do with this? How about you can't predict? It doesn't, we can have an inside day, right? Right? So what do? Well, let's watch right here. Where's the stops? Over at the current high of the day. Exhaustion, icebergs, microstructure, sellers are below the buyers, micro test, who resistance in the microstructure is right there, that little high volume. So let's see what it does. And it's not a recommendation. We're just watching behavior. This is resistance. And it doesn't mean it won't go through it. It's just now we know there was an auction here. Sellers were there, buyers are here. If this is too high, back. Hope you're getting something out of this. I know you're probably going, oh boy, where's that airplane sickness bag, right? You have to decide if this is a condition you can develop an edge in, you know? Not saying you should be trading. It's not my thing to say that. But you can learn how to deal with this in TraderLab. Doesn't mean you'll be profitable. This is what the TraderLab looks like. There's a lot going on in here. Charts being posted, traders sharing and helping each other. You can see this is a short, right? So, you know, it's just, so when I'm trading reversion, if I put a trade on, I get a scale, I get taken out, I just put it back on again. I just follow my plan. I get risk neutral. I take a lot of trades in this condition because there's a lot of rotations. So this is the TraderLab community. Remember, it's a professional community. It's about the business of trading. It's not romper room. This is not some, I'm not some influencer trying to, you know, with affiliate links, trying to get you to, you know, so I can squeeze 25 cents out of you. There's no cost for this. I'm just like you. I started out in 1980. I was an off-floor trader. All my buddies were floor traders. They thought I was crazy back in the day. This is before the internet and PCs, you know, so it was a different world, of course. And I started with classical bar charts, measured moves. And that's what I thought trading was. Let me show you the library of webinars. You start with the primer. It talks about anchored inputs. The same way the casinos operated. They don't make the games up. They don't change them. They just deal the next hand. Certainly something we have a problem with because of our fear. We take a loss or two losses in a row following our plan, then our job is to take the next trade. If we hit our loss limit, we are thankful for managing our risk and following our plan. The only measure, in my opinion, is if you have an edge, is to follow your plan, no matter the outcome. There's going to be days when the market's zigging, you're zagging, and if you followed your plan, no matter the outcome, that's a successful day. It isn't about the profits. The profits are the outcome of the plan. That's how the casinos operate. Remember where we're trying to go. This is the same trade that I was just showing you to come and take these stops out, right? Same trade, different location. Start with this. It's got about 33,000 views. Not bad, right? Stop gambling, start winning. Meet the TraderLab. This is an advanced trading methodology. Now, the interesting thing, what's advanced about it is it actually requires you to learn how to trade and how the market works. The market is not defined by your indicators. The market's defined by participant behavior. And the closer you can get to participant behavior, the more timely with order flow you can act. So you need to understand how the market works, why it does what it does, and how to get in alignment with it. I invite you all to use the link in the bottom of YouTube. If you don't have Bookmap, you can download a digital version of it. Just go to bookmap.com. There's also a link down there. And please give a like on your way out. Support the stream. I appreciate you visiting the TraderLab. This is about the business of trading. You're inclined, and you have been, like the rest of us, waking up in the same place, working hard. Think about all the trapped equity you have, all the time, all the education, all the stops, all the frustration and brain damage, and you're trying to solve for something. Is it possible maybe you're seeking the answers that don't exist for this type of business, which is gaming? Ask yourself the question. And if you keep waking up a trader Groundhog Day, working hard, getting the same results, tweaking, tuning, and all that, we've all done it, that might not be the direction you want to continue going in. It's up to you. You want to visit the TraderLab. It's a great community. Remember, it's a serious community. It's about the business. It isn't romper room, but you all have an open invitation. Please give a like on the way out. Thanks so much for visiting TraderLab today, and I look forward to seeing you guys tomorrow.